Right now, it seems the rich always get richer, even with stocks slipping and even in recessions. It's regular people, like us, who seem to suffer. We're already seeing that as new surveys find more and more people living paycheck to paycheck. Mary Lyons, financial advisor, founder at Benchmark Income Group. She is known as the Wealth Woman. Mary, does that mean I could hit you up for a loan?
Please don't.
Not in this economy.
Yeah. Okay. So and that is, and we kind of set that up in our lead into you. People who are really loaded, I'm talking about the Elon Musks and the Buffetts of the world. No matter what happens, they always seem to emerge in really rock solid shape. And sometimes they actually end up becoming richer. Is there any strategy that the average person can use to not just hope that they don't lose too much money now, but can actually make some money now?
Yeah, I think that most people go into retirement in particular thinking that they're just going to live off their assets and that they'll spend the interest and preserve the principal. And the reality is, in times like this, when we start spending money out of our investment accounts, we're already taking losses. And then if on top of that, you're spending the money, you're compounding your losses. And then even when the market starts to recover, if you're withdrawing that recovery, you're really crippling your portfolio. And over the long haul, that's why people go broke. So building a buffer against volatility or a shock absorber against what the market is actually doing will allow you to preserve your assets for a much longer time. And when done correctly, it can also mean that you can withdraw that money at higher income rates and still sustain the income over the duration of your retirement.
All right, so give us an example of how to get a new pair of shocks.
Okay, absolutely. So I'm going to say something that's actually really unpopular right now and probably very controversial. So listen closely. So there's a lot of research that's been done over the past probably 30 years or so by some names that if you Googled, you'd see them writing in Forbes, Michael Finke, Dr. Wade Pfau, who have discovered that the shock absorber should be created with whole life insurance. And I know that's a crazy thing to say because people hear that and have this immediate visceral reaction sometimes. But because you're looking at a guaranteed return over time and you can never lose money, it actually works really well if its specific purpose is to act as a shock absorber for the market. And that's really probably the most important thing that can do other than the death benefit. But, Michael Finke and Dr. Wade Pfau, they're deans at the American College, which is one of the largest providers of education for certified financial planners. So if they change their hearts and minds about this coming from an investment focus, that's really a huge way that you can prolong the longevity of the assets that you are building, even if it means you're giving up a little bit of return while you're saving right now.
Why is the life insurance option so controversial to begin with?
I think it has to do with rates of return, because when you're looking at where can I get the best rate of return, it's not a whole life insurance policy. Hands down, anyone who tries to argue that it isn't paying attention. The stock market over time is going to create better returns. Real estate is going to create better returns. You can get better returns in private equity. So if the only thing that you're measuring is rate of return, absolutely, it's something that you should never consider. But if what you're looking at is balancing rates of return with a safety net, it's a wonderful safety net. It's kind of like playing golf. If you go and someone's trying to sell you a driver and you're like, wow, I'm going to spend $200 and buy this new driver. And you get up to the tee and you swing the club and find out you're swinging a putter, the ball doesn't go anywhere. But if you get to the green and you don't have a putter in your bag, you have a big problem. And so really a lot of this is about understanding what tools are available and how should you actually be using them.
Yeah, how active or not should people be in some of these situations? I saw a meme the other day and I brought it up on the show. I think it said, I bought the dip and then I bought the next dip. And now we've had 3 more dips and I'm out of money to keep buying the dip.
Right. And again, that's why in a situation like this, sometimes you just need to hold tight and have alternate sources of capital. One of the things that I think is really important in this situation in particular is to get away from this mentality of net worth. We're taught to think that that's what wealth is about. If you shift your focus to income creation, you end up in a totally different situation, because if I am building passive income streams and I diversify those passive income streams, if something happens in the market and my assets aren't performing, it's not disrupting my daily life or the lifestyle I'm living. And that's where I think Americans can start making totally different choices. By focusing on income, the net worth will take care of itself over time. But if you're focused only on net worth, that frequently doesn't translate into income.
Mary Lyons, financial advisor, founder at Benchmark Income Group, known as the Wealth Woman.